talking about some of the refinancing stuff. I know, Nate, there is some of the short refinance programs. A couple different opportunities there for people that that look to do that. Would you mind touching on that for just a second?
Sure. Historically, for someone to refinance their home, they would need to have equity in their home. Nowadays, that's kind of a lost thought, basically. And I just want to touch on a couple quick programs that people can do a refinance on their home. It doesn't require that they be late. This is not a modification. This is an actual refinance, even if you do not have equity in your home. If you have an FHA government-insured loan, you can do what's called a streamlined refinance. There's not even an appraisal required. No appraisal whatsoever. It doesn't matter how much you're upside down.
And that's FHA.
That's FHA. It's a streamlined product, and what that means is, it's crazy, but they don't even verify your income. The way they look at it is they say, look, if you made your last 12 payments on time, the government's already on the hook for that loan to insure it. Let's just go ahead and drop your rate. It doesn't really matter what you owe on it. It doesn't matter what your income is. Apparently you're able to make the payment, so that's all we need to know. It's called a streamlined refinance. It doesn't matter how far upside down you are. The VA has a similar program as well. They will check out some of the income. However, again, you can still refinance regardless of what you owe. If you have a VA loan, you can drop it down to the lower rate on those programs. Conventional loans currently under the HART program, that's the Home Affordable Refinance Program, you can take a loan and refinance up to 125% of the value in today's market of the home and get a 30-year fixed rate mortgage. And these aren't, like I said, these programs aren't to where you pay a higher rate for it. You're in 30-year fixed rates in the fours in these programs. It's
remarkable, the interest rates right now, 3.75 you mentioned on a 30-year fixed.
Yeah, we locked a VA buyer, a veteran bought a home, 30-year fixed rate, 3.75% with no points, no extra costs, no nothing, this past week in our office. Now,
what are you seeing for 15-year rates?
It's 15s are in they're in the very low threes. I mean, like
that's
low
crazy.
threes, real low
almost
threes.
High twos. At some point, they're going to be in the twos, and that's just
and right now, I would say it's always, whenever you're getting a home mortgage, it's always important to inquire and shop and what have you. But right now, it's more important than ever because we've seen a lot of lenders and banks that say, the market's rates are down there. We don't have to drop our rates down there. We're getting plenty of customers without even dropping our rates that low. And there's the biggest disparity now more than ever between credit unions, banks, lenders, and mortgage companies as far as the rate discrepancies. And there's always going to be some, but right now, I mean, it's huge.
Again, you're listening to Duncan Duo Real Estate Show. You can call us with your questions, 990-9352 in Hillsborough, 461-9352 in Pinellas. Again, those phone numbers end in 9352 or WFLA. Nate, what are some common mistakes people make when refinancing?
Whenever they're refinancing, the biggest thing is just have a good idea of your value, and of course, in most cases, an appraisal will be done. But I would just say, bank statements. That whether it's a purchase or a refinance, the bank statements, whenever they come into play, they get analyzed by an underwriter. And anytime there's a deposit going into that account that is a non-payroll deposit, they'll want to know where that comes from. And that could be as simple as providing a check, from a friend that gave you some money to reimburse you for a fishing trip or what have you. But other times it results in, that money was transferred from this account, and then you show them the next account, and that account has 3 other statements, deposits coming in, and it gets into a ball of yarn. And again, it's not that they're not going to work out; it's going to get approved. It just comes down to how much of a pain do you want to deal with.
Well, and also I think some hesitating to lock in that low rate because you could snooze and the rate could adjust a quarter, half point. You could lose some money there.
Yeah, what's happening in this market now has nothing to do with natural markets. This is government, getting involved, and just like they get involved, they can also get out of it. And you're in a market right now where you can see some substantial swings in the market.
Right.
I mean, if you're content with where you're at now and the rates are where you're being quoted at, like I said, check around, but don't wait 6 months thinking that something's going to happen differently. So.
Well, and I think one other side of it is just like you mentioned, don't hesitate to overlook the shorter term loan. Because a 15-year mortgage right now, it's amazing if you can go into that.
The most common thing that we're doing right now is we're taking people that have 30-year mortgages, we're refinancing them into 15-year mortgages for about the same payment that they're currently paying now. They're usually shaving off on average about 7 or 8 years, depending on where they're at in their amortization schedule.
Okay.